Hello, 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 everyone. Happy Thursday to all my fine friends. How is everyone doing this morning? Good morning, Sterling. Good morning, John. Good morning. Good morning. Boy, come on. Good morning, Jacob. Clicky fingers not working. Good morning, Patrick. Thank you for putting in the earnings, Sterling. Good morning, Bull Strike Cheetah. Zscaler was a beat. Again, there wasn't anything that's going to be market moving. Good morning, Eric. Oh, Kroger missed on revenue. What else do we have? Crackle Barrel. Hey, that should have moved the market. Why isn't the market rallying? Cracker Barrel beat. Chicken fried steak is obviously still in fashion. Macy's missed. What else do we have? Good morning, Royal Palms. Thanks for shouting out Sterling, John. What did you think of the Challenger job cuts? We'll talk about that in a second. Again, job cuts, big number there. Big increase in job cuts right there. We'll see. You know what? I mean, mortgage rates have come down a bit. But, if you were sitting on the fence and mortgage rates were at 7%, now they're at 6.7, was that your deciding factor? Hey, Richard. Why aren't you early every day, Richard? Democratic heads are exploding here in Maryland near D.C. Well, lots of things seem to be exploding in D.C. All right. So I tweeted out yesterday, hey, could you guys do me a favor? And if you follow me on Twitter, which everyone should follow me, come on. I should want to be one of your top follows. If you don't follow me already, and I'm being sarcastic, it's at MG Arnold. I'm trying to get a little more traction. Could you like the tweets or retweet them for some of you? If you see stuff go out, I posted the potential double setups yesterday, which never triggered, and a bunch of them are invalid. So, what else do we have? Let's take a look at the numbers, and then we'll take a look at the markets. Challenger job cuts, huge spike. This was a huge spike. Not surprising, but a huge spike. So, is this going to follow through? Again, are we going to see more initial jobless claims? Initial jobless claims actually dropping from prior and coming in below consensus. Continuing jobless claims coming in above consensus and above the prior number. Still hovering just below 1,900. So, what else do we have? We have exports coming in a bit higher than prior, imports coming in a lot higher. So the trade balance is shifted again. We're importing a lot more than we're exporting. All right, what do we have coming up next? By the way, non-farm productivity down from prior, but a bounce from consensus, and the unit labor costs coming in higher than prior, but down from consensus. So, what else do we have today? Well, we have wholesale inventories probably not going to move much at all. We have the short-term bill auctions. We have mortgage rates coming out. We have Waller, Bostic speaking. And remember, tomorrow morning, non-farm payroll. Hello, Charles. Love the glass that you should be wearing in there. I don't understand the comment. Love the glass that you should be wearing in Arizona. Good morning, David. Oh, glasses. Those are the I forget what they were called. I don't know. It was a style. I've just never updated my thing. But okay. So we got a pretty red market this morning. Again, mega caps losing traction after a couple day bounce. Not a lot of green. Fastenal and Granger. Oh boy! Then we got Freeport McMoran. But there is not a lot of green on this market being sold pretty much across the board. You can see here every sector is red, being led by technology. FedWatch Tool has a cut starting in June, a cut then in July, and a cut in October. So markets pricing in things sort of falling off a cliff. Fear and greed, we're still in extreme fear. Schiller PE 3680. So that's all she wrote. Sterling put it in all the earnings. Thanks again. Now, after the close, we got Broadcom and Costco. Costco's really going to be interesting because Costco's trading at insane valuations for the kind of store it is, and going to still see if they can keep the earnings chugging. But even if they do, it does not justify the multiples. Broadcom hitting the 200 before earnings. So, what else? Good morning, Ted. Good morning, Heinrich. What else do we have? So I tweeted out yesterday because we had the double setup. So, and one of the front ones were if we closed above the 62.5, which we did, but look at the rotation zone. Here's the 4-hour rotation zone. Boom. Here's the daily rotation zone in the way. And if you're trying to learn, and I got another comment in a second, but look, it hit. Let me expand this again. Let me expand this. So once it closed back below the 62.5 without confirming or triggering, it was off the table. Done. Done and dusted. Now people respond to me and say, why are you bullish? Just because I put a potential setup out, it does not mean I'm bullish. It has to trigger. And if it triggered, what's the name of the game? What do we watch? Let me just undo this. What do we watch? Because look, what's in the way? The rotation zone. So you have to be more aggressive with the targets. A setup is just a setup. It doesn't ever have to trigger. What's still the trend? Remember, we've been in bearish mode on the daily. On the weekly, we're in neutral mode, probably shifting to bearish mode depending on what happens tomorrow. All right, we've definitely confirmed the massive double top. Does that mean the market has to collapse? No. But that means I watch for rallies, and we can't even sustain a rally. Look, we had a one-day pause from last Friday, end of month, wiped out by the next day. We had a one-day bounce yesterday that helped form the double. That's what I was watching for yesterday morning. That's what I said on the live stream. We formed a double and never triggered it. So just because there's plenty of patterns, like there's %B setups that never trigger. Just because there's a setup does not mean I'm one way or another. Right now, I use the things with the rotation zones to help me stay on the right side of the market and help me with targets and stops. When we're in bearish mode, any bullish trade has to have tighter targets, and I raise my stop more aggressively. Why? Because anything into the rotation zone can rotate back down. But you still have to acknowledge the setups. We will get rip your face off rallies. We will get bullish setups that run. So it's a good thing to watch them. Right now, we're trading at very key support. 57.80. We break below there. We have this 57.45 to 55.50 zone. We break below there. 57.20 is my next key target area lower. All right, I will be watching first and foremost on any rally the 4-hour rotation zone. So the little initial area on any pop would be just about 58.15 area. And then the key thing is 58.50 at this point. Since there's no double on the table anymore for the S&P, then my key thing is this prior support turns into resistance still just above the 4-hour rotation zone. So we still have to get above that. And then we have another stopping point here, 58.79. So on any bullish trade, unless we have massive momentum, I have to aggressively raise a stop and or take profits at some of these key levels because there's a lot of stopping points until we get into this clear path move up here. All right. Hope this makes sense. So again, my key, if we continue to sell off and we take out the lows from yesterday and from Tuesday, then the key level is this 50%. 50% from the up move from August 5th. will be very key. The NASDAQ. Let's take a look at this. Is this invalidated yet? So we come over here. We have traded below 62.5, but not closed. So what? This is still technically valid. Looks like it's going to turn into a channeling double if it does trigger. But now, if this closes, when this bar closes, if it's below 20,321.75, the double's off the table. Or if it trades below 20,239. It doesn't need a close. It just has to trade below there. The double's off the table. So those are the two key levels I'm watching. If we trade below that, the level I'm using is this 20,160. Okay? If we break below all that, then my next minor area is about 19,795, so 19,800. That's my next actually key area, and then you have the cluster right below that. Not expecting that to get hit today at all. Then to the upside, same level as yesterday, about the major level is 20,572. The minor level is going to be 20,486. And then the breakout level to get us into a clear path and possibly still trigger the double is above 20,650. The Dow, this double, it technically confirmed. You see here, it confirmed but did not trigger. 4-hour rotation zone in the way. And now it is off the table. So that one's gone too. Your minor resistance going into the open is about 42,880 to 42,900. Major resistance is coming in at 43,75 to 43,100. It's trading at very key support right below this. If we take out the lows from Tuesday and Wednesday, 42,375. The Russell. I don't think this one technically invalidated. No, it didn't. It needed a trade below 2,066.9, and this got down to 2,067.1. Now, if it closes below 2075.2, it's off the table. Or if we trade back down below 2066.9, it's off the table. So technically, it's not. I am just going to, well, I'll leave it on. I'll leave it on, but again, I'll use the harmonics to the downside, the key level to the upside, 2091. Then the major level is just about 2108 area. Key support, if we do break down below 2066.9, is 2058.6, and then the lows. And then below that, we have 2036. Does this make sense how I'm trying to show how the structures work so you don't get caught up? You can analyze both sides. But this market really has to prove itself because remember, all these rotation zones are headed down. The DAX spiking up to the next harmonic. We had 23,453. This spiked up to 23,469, just slightly above that level and coming back down. The ECB also cut rates again. So they're getting pretty dovish pretty quick. So we're going to have to see about that. But is there a key topping pattern? No. Not yet. Not yet. Any pullback, we still have the rising rotation zone, and we don't have a topping pattern in play. Let's just look at the yield. The yield. Okay, we had a %B buy. Yesterday broke above the high and followed through with a close. So a triggered %B buy. Also triggering a inverse head and shoulders pattern. Coming up to the first target. This is a horizontal line modified inverse head and shoulders. Coming up, so now we have a minor bottoming pattern in play. And since it hit the first stop, the invalidation point, the aggressive invalidation point is called the walkaway trend line. So if we close below this, the conservative area would be 4.19. Okay, I wouldn't be giving it a bunch of leeway below about 4.25 personally. But we have yields bouncing back. I said I was watching for some kind of minor bottoming pattern, and we got it into the rotation zone. That's why it's more aggressively raising a stop. The next key area on a move higher is 4.37. You're welcome, Andrea. Thank you for tuning in. Thank you for being here. Again, I'm not trying to make people try to trade like me. I'm trying to show you an analysis that if you can start thinking and you can come up with your own analysis, but have a structured plan and do both sides of the market. And then you can know which side is more favorable. Or like right now, the bearish cases are more favorable, keeping in mind that at some point, especially in bearish cases, we will get those rip your face off rallies, and you could have the Trump effect, because who knows what he can say next. Who knows what could, and this is going to be the case for the next, 3 years and 9 months? We're going to get crazy markets with him around. Dollar index, nearly to the final target, right at the 62.5 harmonic. Going to be interesting, and this is where I would use also closing to the gap open, not to the gap close yet. But this, unless we close below the 62.5, I'd use a modified potential third target. By the way, if also you can see here, if I move this to the conservative side, which it was very much valid because of where this was sitting. So look where that final target is. And I actually didn't move it on this thing, but from my perspective, that was the correct thing to do. So you've hit the target or you're close to the aggressive side. I'd still use this target area right at 62.5, which is splitting between the two aggressive and conservative sides. So this trade is done. Now, if we do close below 62.5, I will watch for a bounce and then the next rollover, because of how extended this is, and we're getting to cycle bottoms in the next little bit, and we are very oversold, which is another reason I'd be unwinding the short and then waiting for a new setup. Crude. Obviously, here's another thing. I got a message. You're bullish on crude. No, I said the only thing that could make me look for a bounce in crude is if we triggered a double. Did we obviously trigger the double? No. What happened yesterday? You sold off. So that was, the double was no longer valid. Remember, 4-hour rotation zone down. Daily rotation zone down. And from a weekly perspective, we're coming in, I drew that line yesterday into the key support, and that's where we tagged off of yesterday. Do we have a bottoming pattern? Not yet. Not yet. We're just testing the 4-hour rotation zone. Now, if you're a short-term trader, it might break above 66.85. You might get a little pop, but that's scalpy. We're not covering that here. Gold, nothing to talk about. Coming up, 2941.5, 2941.3. Did this take us into double top territory? No. So I'm not going to put up a potential double top because it's not official. This is where, if you have a structured set of rules for whatever you trade, don't just trade what you think's going to happen. Have a structured set of rules, and because it's going to keep you on the right side of stuff, and at least it's going to help you not do stupid. And I don't care if you miss trades. I don't care if you have losing trades. The overall goal is to test something out and have a positive trade expectancy and then stick to the plan. Copper. So, copper holding the weekly rotation zone, rotating back up. All right, so the only thing that shifts this on copper, why I'm showing this, is now we have, this did not get high enough to make a double top, but now we have a potential double top. Right, and I'd move this to the conservative side also once that's in. So that's the only thing that would get me bearish on copper in the short term. Why? Because that double would potentially even be out of the way of the weekly rotation zone. and potentially break down to the recent low key support area. Other than that, if we follow through and especially close a week above 4.83, then I'm shifting because the probability shift, again, not guarantees, the probability shift that we could go higher for copper. Yen, after look at the yields on the 10-year JGBs, 1.55. That is massive. These are yields that haven't been seen since '09. Okay, inflation is starting to really ramp up in Japan. Be careful what you ask for. And look, because of that's flowing in, the yen is breaking down. We're still in the key reversal zone. If the yen closes below the 62.5, I would not be shorting it initially. I'd be watching to short on rallies. Euro, based off the deficit spending and everything else in the German essentially rescue plan, has been on a tear. However, same thing here. This has to follow through with a close above the 62.5. Then I'll be watching for pullbacks and rotations back up, as long as we don't form a massive topping pattern. The spiders, little bounce here. Again, the key level was 583.87, just poking above it slightly yesterday and closing below it. And now we have the gap down. Yesterday's open is going to be key. 576.69 on any rally. Then again, your major area is 583. Other than that, I'd use the intra-bar harmonics. Key support right now, 575.60. If we break below that, it's back to this 572.50 to 573 area. And that's right where that is. If we break below that, 568.95.69. We have a very key support zone. The Qs, just breaking above the resistance and then forming two tops. Not a double top, but two tops. So that is, oops, wrong one. All right. There we go. That's going to be a very key resistance area because it was reconfirmed with pretty key selling pressure, and then we have a gap down. So with that gap down, the first target, if we do rally for me, is the 496.20 open. The next key level to the downside is 491.50, and then we have the low area formed by Tuesday. By the way, if we break down below there, let's just do the forward harmonics on here. And we have a nice cluster between the potential confirmed double, not yet triggered on the weekly, and the forward harmonics. That gives a really nice level also. Bitcoin, potential double is still in play. Not invalidated yet. When the moving averages start rolling over, do you ever use the 20 EMA having a lower high rollover as a short entry? I pay attention to that, but it's not a technical entry for me. There's other entries I look for. What do you mean it nailed me, but no comments on harmonics? It can't nail me if it can't comment on harmonics. What's my trading style according to Grok 3? I'm really curious. What else do we have? Broadcom earnings today, bouncing off the 200 yesterday. Big gap down today. If this breaks with earnings, watch out. That will break the 200. And on a bounce, it would be a bounce, and I have no insight into their earnings. Again, this would be a very risky setup, but on a bounce play, I'd be watching the top of these moving averages. NVIDIA, little bounce, But another gap down. Things have been turning in that was bought for a long time into being sold. By the way, the bottom of the channel is getting close on the rollover play. So then I'll be paying a little more attention to that. Tesla, there's no fantastic pattern yet in Tesla. Still another gap down, still below the 200, still below the declining rotation zone. Now we are getting divergences in here, but cycles are getting back to the top, so it's there's no trade yet in Tesla for me. We did not close below 62.5 yet either. So Micron is near the bottom of a weekly horizontal channel. Let's take a look at Micron on a weekly. And this is a horizontal channel that's gone a whole bunch of nowhere. It is near that. Right below that, though, is the 200. This is not, Micron has not been bullish for a while, but really watch if it does break down below this 86 level. That would get interesting. It'd have to be aggressively structured because you have a support base right here, right at the 200, this support base. But if that breaks and it's technically closed below on a weekly, below the 62.5 and never invalidated that. So we still technically have the magnet prices of the 75 harmonic and the 87.5. Going to be very interesting to see that. And earnings next, what is that, 2 weeks from now? 2 weeks from today in Micron. Okay. All right. So let's see. The markets are open. The markets are open. Let's take a look at the NASDAQ first. Because, why am I looking at that first? Because remember, if we get below 20,239.50, the potential doubles off the table. And now it's looking more and more likely, unless we get a pretty strong rally in the next 28 minutes, that it's going to close below. Oh, we'd have to get a decent bounce. But it looks like, all right. Let's just see. Come on, just let's be done with the double. Let's be done. Oh, don't do this to me. Let's check the Russell. Russell's still holding in there. NASDAQ technically still holding in there. Let's take a look at the S&P, which the double's already off the table, and we've broken below support. So it's got to at least form something. I got to get a strong pattern or massive momentum to get something on the long side right now. Let's take a look at the tick. Because things are getting sold and a pretty negative tick opening. So on a tick bounce, the market's got to get above some key resistance and then hold that. Otherwise, I'll be watching for rollover plays. Oh, you've got to be kidding me. Look at that. Look at that. 20,239.50. 20,238.75. So we can take the double off the table. Does that mean there aren't any bullish setups? No. It would again have to get into the clear path move to really get some, or I have to get a stronger setup against key support. But that double is off the table. The Dow's getting shellacked, down 500, down 1.16% into that key support area. Now I know why you're bald, but that's better than becoming crazy. You know what? Thank you, Coco. Thank you, Coco. I've ripped my hair out years ago. So, again, if you have a structured set of rules for everything you do, I don't care if it hits that. I don't care now. Let's say the NASDAQ, let's say Trump comes out and says something and the NASDAQ immediately jumps like 200 points and would have triggered that double with just taking it out. It doesn't bother me. There'll always be another trade. There'll always be another trade. I'd rather have a set of rules that have been tested out that I can follow, and therefore I'm not guessing. So keep an eye on the 4-hour rotation zones on any bounce. And the bottom of the 4-hour rotation zone is very key. So the first area now on the S&P would be about 58.10. On the NASDAQ, it would be about 20,450. So that's what we'll be watching if we get any bounce if the tick firms up. All right. With that, I hope this helps some people. Just trying to teach everything I can easily teach on a live stream. So maybe one thing I say or show you will help you in your trading career. Again, if you don't have a setup, there is no trade. Sit on your hands. Do not force anything, especially if you're a long bias trader. Do not force anything in this market yet. And I will talk to everybody for non-farm payrolls tomorrow. Have a wonderful, wonderful day. See you all then. Bye for now.